Capital budgeting. Capital budgeting is the method by which long-term investment decisions are made. Long-term investment decisions involve outlays and inflows that may extend over many years. Example, investment in research and development may require cash outlays for many years before the arrival of a commercial product that generates profits for the firm. Even with a new product in hand, the firm may be required to make significant upfront expenses in advertising, promotion, and distribution during launching event. Present value and discounting. The present value, PV, of any monetary sum accruing in the future is the monetary amount today that is equivalent to it. The issue of equivalence arises because any monetary sum held today earns interest over time. It is much more valuable to hold 1,000 pesos today than to be entitled to 1,000 pesos 8 years from now. The difference being the amount of interest today's holding can earn during the next 8 years. Calculations of future value. Suppose City Dwellings Incorporated holds 100,000 pesos in short-term liquid funds in a bank account paying 10% interest annually. If left in the account for 1 year, the original funds will grow to 110,000 pesos. Algebraically, the formula to calculate future value is given in equation 4.1. That is, FB1 equals to quantity 1 plus R times B, where B, this is original sum or the principal, R, the annual rate of interest, and FB1, this is the accumulated balance after 1 year. It is easy to think of FB1 as the future value, 1 year hence, associated with today's current holding of 100,000 pesos. Having knowledge of the current sum, B, and the rate of interest, R, one always can compute FB1. When rearranging equation 4.1, an alternative interpretation emerges. That is equation 4.2. B equals FB1 over 1 plus R. In this expression, we think of B as the present value associated with the amount FB1 accruing 1 year from now. To illustrate, suppose City Dwellings Incorporated expects to receive 110,000 pesos in a year's time. What is the sum of money that, if held today, would be equivalent to the future 110,000 pesos? Equation 4.2 gives 100,000 pesos. Extending the above example, let's compute the future value of today's 100,000 pesos if held in the bank account for 2 years. After 1 year, the balance has grown to 110,000 pesos. After the second year, the 110,000 pesos balance will grow by an additional 10%. In other words, we must multiply 110,000 pesos by the factor 1.10 to arrive at the new balance. That is 1.10 times 110,000 pesos is equal to 121,000 pesos. Notice that starting from the original 100,000 pesos amount, we can find the final balance, which is 121,000 pesos, by applying the factor 1.10 twice, that is, FB2 is equal to 1.10 times quantity 1.10 times 100,000 pesos. So we have 121,000 pesos. In algebraic terms, the future value in period 2 is given in equation 4.3. In general, if R is the annual interest rate, the future value after n years of B pesos today is given in equation 4.4. For concreteness, the following example makes the point. Example number 1. The amount invested is B equals 100,000 pesos at 10% annual interest. The future value after 4 years is 146,410 pesos. After 7 years, the future value is 194,872 pesos. How did these future values calculated? So we have here FB4 and FB7. Notice that due to compounding, future values grow relatively quickly over time. Earning 10% annual interest, the original 100,000 pesos almost doubles in 7 years. Valuing future cash flows. A cash flow denotes a pattern of monetary amounts received or paid by the firm over time. Let's begin with the simplest cash flow, a one-time monetary payment received by the firm n years from now. Assume a fixed annual interest rate is expected to prevail over this time period. Then, the present value of this future receipt is given in equation 4.5. That is, we have PB equals to CFN all over quantity 1 plus R raised to N, where CFN, this is cash flow the firm receives in year N. PV, this is present value today. And R, this is annual rate of interest. Example 2. Suppose City Dwellings Incorporated expects to receive a cash flow of 146,410 pesos 4 years from now. At 10%, the present value of this receipt is equal to 100,000 pesos. If instead it were to receive a 200,000 pesos payment 6 years from now, the present value would be 112,895 pesos. What if City Dwellings Incorporated expects a number of monetary receipts at different years in the future? Then the present value of the entire stream of future monetary receipts is simply the sum of the receipts' individual present values. Example number 3. City Dwellings Incorporated expects to receive 146,410 pesos 4 years from now and 200,000 pesos 6 years from now at 10%. We find the total present value of this cash flow to be 212,895 pesos. Specifically, so we calculate PB4 and PB6. That is, for PB4, we've calculated 100,000 pesos. And for PB6, we've calculated 112,895 pesos. Thus, the total present value is PB4 plus PB6 or 212,895 pesos. In general, the present value of any cash flow can be expressed as in equation 4.6. That is, the present value is simply equal to the summation of CFN over quantity 1 plus R raised to N, where N is equal to 0 to T. The symbol summation denotes summation over the discounted cash flows. in the years 0, 1, 2, up to t. An equivalent way of expressing equation 4.6 is through equation 4.7, where CFO, this is the cash flow received today, is not discounted since quantity 1 plus R raised to 0 is equal to 1. Example 4. City Dwellings Incorporated is considering to acquire a new condo unit in Cubao that will allow it to increase accommodation capacity. Acquiring the unit will require an immediate capital outlay of 500,000 pesos. When in operation, the unit is expected to generate an addition to City Dwellings operating profit of 200,000 pesos per year, based on annual revenues of 1.1 million pesos and an annual operating cost of 900,000 pesos for the next 5 years. The annual interest rate applicable over this time period is 12%. What is the present value associated with acquiring the condo unit? Figure 4.1 displays the cash flow timeline of City Dwellings Incorporated. Note that monetary inflows, cash received, appear above the timeline. The initial capital expenditure and outflow appears as a negative value below the line. The present value associated with this cash flow presented in figure 4.1 is equal to 220,900 pesos as calculated. Notice that the 500,000 pesos immediate capital expense is not discounted. It is already a present value since it is incurred today. The combined present value of City Dwellings' future profits comes to 720,900 pesos. Thus, the net present value of the cash flows associated with acquiring the condo unit is 720,900 pesos minus 500,000 pesos equals 220,900 pesos. Net refers to the fact that it takes into account all cash flows, including the initial investment. Suppose City Dwellings Incorporated pays a flat 35% tax rate on its taxable income. The 200,000 pesos annual profit flows are taxable with one exception. It can depreciate the condo unit on a straight line basis over 5 years. This simply means City Dwellings can take a deduction of 100,000 pesos, that is 1/5 of the total 500,000 pesos capital cost, against its annual income for each of the next 5 years. Thus, its yearly taxable income is 200,000 pesos minus 100,000 pesos equals 100,000 pesos. At 35% rate, its tax is 100,000 pesos times 0.35 equals 35,000 pesos. City Dwellings Incorporated after-tax cash flow is 200,000 pesos minus 35,000 pesos equals 165,000 pesos. Thus, taking the effect of taxes into the cash flow timeline as in figure 4.2. Accounting for taxes, the present value of acquiring a new condo unit becomes 94,700 pesos. Annuities. Many investment problems involve periodic cash flows of fixed amounts. Such cash flows commonly are referred to as annuities. The decision to acquire a new condo unit that generates a 5-year level annuity in the amount of 165,000 pesos after taxes is a good example. Fortunately, the present value of annuities of different durations at different interest rates have been tabulated and are readily available, as in Table 4.1. For example, one such table entry would correspond to a 5-year annuity at a 12% discount rate. The PB of such an annuity paying 1 peso per year is 3.605 pesos. Thus, at a 12% discount rate, a 5-year annuity paying 1 peso at each installment has a PB of 3.605 pesos. If the annual payment were 100 pesos instead of 1 peso, the corresponding PB would be 360.50 pesos. In the decision by City Dwellings Incorporated to acquire a condo unit, the annual cash flow is 165,000 pesos. Therefore, the associated PB is 594,825 pesos. This is approximately equal to the PB found earlier by direct calculations. That is 594,794 pesos. Accounting for the 500,000 pesos initial outlay, the net PB of acquiring a condo unit is 94,825 pesos. Perpetual Annuity, or simply a perpetuity, is an annuity that goes on forever. For example, suppose the annual 165,000 pesos cash flow is expected to occur indefinitely, year after year. At a 12% interest rate, what is the present value of such a perpetual annuity? A very simple rule for finding the net present value of any perpetuity is given in equation 4.8. That is, PB equals CF over R, where CF is the constant annual cash flow and R, this is the discount rate. In words, the present value of a perpetuity is found by dividing the periodic payment by the annual interest rate. In the condo unit example, PB equals to 1,375,000 pesos. Logic of this rule. Consider an infinite sum of the form A, quantity 1 plus x squared, and so on, where A can take on any value and x is any value less than 1. The value of this sum is A all over quantity 1 minus x. A perpetual annuity corresponds to the case where A equals to CF all over quantity 1 plus R and x equals to 1 all over quantity 1 plus R. Substituting these values yields PB equals A all over quantity 1 minus x, which is equal to CF over R. It is of some interest to value a growing perpetuity. Suppose an annuity pays CF after the first year and the payment rises by G% each year thereafter. A growing perpetuity has a present value of the following form. Here, the term 1 plus G is applied repeatedly to future cash flows to account for growth. The sum of this infinite series reduces to a very simple form, as in equation 4.9. That is, PB equals to CF all over R minus G, where R, rate at which cash flows are discounted, and G, rate at which cash flows grow. Example number 5. In forecasting long-run cash flows, the effect of inflation often is an important factor. Returning to the condo unit investment decision, suppose future peso profits are expected to grow by 4% per year due solely to price inflation. Cash flow will continue into perpetuity and the discount rate remains at 12%. The resulting present value is equal to 2,075,000 pesos. In real terms, City Dwellings Incorporated earns a constant operating profit each year of 165,000 pesos. In turn, R minus G equals to 0.12 minus 0.04 is equal to 8%. This rate can be thought of as a real interest rate. That is, it is equal to the nominal interest rate minus the expected rate of inflation. Discounting and valuation. The interest rate used in present value calculations is known as the discount rate, or sometimes the hurdle rate. Before calculating the PB of a cash flow, we must specify the discount rate. Consider again a simple bank account investment that is risk-free and offers 10% interest. It follows that any other risk-free investment should be held to a comparable discount rate. Such an investment will be considered profitable if and only if it has a positive net present value when its cash flows are discounted at 10%. For example, suppose that under the terms of a special banking account, an investment of 1,000 pesos today produces a payback of 1,500 pesos, provided the money is deposited and not withdrawn for 5 years. Is this a profitable investment? The answer is no. At a 10% discount rate, the PB of this investment is negative 69 pesos. In summary, we stated that capital budgeting is the method by which long-term investment decisions are made. We've also enumerated various formula to solve problems related to capital budgeting. That is equations 4.1 up to equation 4.9. Thank you very much. That ends or summarizes our discussion in capital budgeting. See you in our more lectures.